Good afternoon, everyone. Welcome to the European Innovation Council Summit. The panel we're going to be talking to this afternoon is on investing with impact. And for the panel, I have the pleasure to welcome with me here in Brussels, Lindvall. Please, could you just say a few words about yourself and your company?
Good afternoon, everybody. I'm a co-founder and the CEO of a French startup company, Rosi. So Rosi is engaged in the revalorization of high-purity raw materials for end-of-life, so old PV modules. Rosi is one of the beneficiary of EIC mixed investment, mixed funding, in the framework of Green Deal.
Perfect. The other panelists we have on the Zoom call, I see Allegra there. Please, could you introduce yourself and just say a few words about your fund? We can't hear you. Yes. Hey.
You can hear me now? Does that work?
Yes.
Same player, try again. Okay, so business engineer by education. I spent most of my career as first of all, as an entrepreneur and then as a venture capitalist. I've joined earlier this year Breakthrough Energy Ventures. So Breakthrough Energy Ventures is a climate-focused venture capital fund, which seeks to accelerate our progress towards net zero. And a couple of things that makes it different is threefold. One is that it's a truly for-impact investor. So we solely back technologies which would have the ability to mitigate 0.5 gigatons of CO2 emissions every year. Second of all, it's a patient investor in the sense that we are structured to last 20 years. And the third element of differentiation is what the team is actually made of, which is either former entrepreneurs who have been in those shoes before, or a scientist which have the ability to conduct thorough technical due diligence over the investment opportunities that we look at.
Perfect. Thanks so much, Allegra. And now over to Heidi.
Hi, my name is Heidi Lindvall. I am the general partner at Pale Blue Dot. Pale Blue Dot is a 87 million euro climate tech fund based in Sweden, but we invest all around Europe and US. We are a climate tech only fund, so we invest in climate tech, but for us, climate tech is very wide. So we see climate positive startups in every different sector. So anything from food and agriculture to fintech to mobility, transport, fashion, supply chain, you name it. And we've been operating for a year and a half now. We've done 15 investments, mainly seed stage investments. Before I started Pale Blue Dot, my own background was in human rights. Originally, I've then been building startups for the past 10 years, also built a few accelerators and micro funds before starting Pale Blue Dot together with two of my partners last year.
Brilliant. Thanks a lot, Heidi. And last but not least, we have Tomas in Lithuania.
Hey, hi, Kinga. Good to see so many familiar faces. So I'm Tomas. I'm a GP at the Contrarian Ventures Fund. It's a small seed fund for the moment. We're investing all across Europe and Israel, coming in early on the seed stage, partnering with entrepreneurs, focused on the climate space, but a bit more niche than Heidi. So we more focus on sustainable energy transition and mobility. So it's kind of all things to do with electrification of industries, decarbonizing the industries. Yeah, briefly about me, that's kind of it. Super happy to be on the panel. See so many great faces here, so my pleasure.
Excellent. Great to see all of you and great to see you're engaged. Maybe just to kickstart our discussions, impact. It seems like a really big word. And here we are, venture capital investors. Can you just talk a little bit more? Why did you want to connect venture capital with impact? What is your mission? How do you think about impact in the space that you are in, just to understand from a high-level view? Maybe we start with Tomas.
Well, look, for us, when we started the fund, it still is a very small fund. So sort of we had to, we didn't, when we started the fund, we didn't have like a perfect impact methodology, perfect metrics that we just come out and go to the entrepreneurs and say, hey, this is how you're going to do it, this is how you're going to report it, this is what we need from you. So we're still spending a lot of time building these frameworks and methodology. For us as an investor, obviously now everyone talks about impact, everyone talks about ESG, everyone talks about green stuff for us, but that's all the generalist funds as well, not only us as an impact investor. So for us, it's much easier at Contrarian to do this, but I think we want to do much better and much more what we do now. I think when we started it, we'll look at the startup, it's working on electric bikes, innovation for couriers, like our portfolio company Zumo. So on the sort of first layer, it makes all sense. It's changing, moving people onto the electric bikes. So sort of all makes sense from the first point of view. But when you go much deeper, when you go into scope 2, scope 3 emissions, then that becomes much grayer and much more sort of uncertain. So we started doing more work on that space, sort of going deeper, thinking about, hey, how you guys source those batteries, from who, then that supplier, how do they source the materials for those batteries? And it's often very hard to get that data. It's both us as a fund being very small and sort of at the beginning of our journey, but also then the startups being very tiny with maybe a few employees also cannot think about all those things. So we kind of work together with them at different stages. We do more and more work. When they mature, when they have more funding, when they have more resources, we go deeper and deeper. But we definitely always do the sort of first evaluation, whether the whole story, the whole thinking of the management makes sense and they want to move into the right direction, then it's impactful and it works for us.
Yeah, very good. And Heidi, how do you think about impact and venture capital together? What is your mission there? What is your vision?
Sure. So at Pale Blue Dot, for us, we didn't just do this because we thought it was the right thing to do and the time was now, even though we think, climate is what we should be focusing on and there is urgency around it. But we also knew that this was going to be the biggest investment opportunity in coming years, because we kind of saw all of these different changes happening at the same time. We saw a lot of countries saying that we're going to be net zero by 2030 or by 2050. We saw all these corporates taking climate pledges, saying that they're going to decarbonize their whole supply chain. They're going to figure out how to completely change what they do in order to meet net zero very, very soon. All these regulations coming in, of course, in really, carbon taxes and taxes on plastics, etc. Like all of these different discussions happening. So much consumer awareness, consumer pressure on businesses. And we saw a lot of founders who said that the next thing I'm going to do is going to be impactful. It's going to be within climate. So for us, this was the golden opportunity to really go and show people that we can use VC to actually solve some of the biggest problems that we're actually facing. And this can actually be used for good. And this is not a compromise. This is not a philanthropy. This is not a charity at all. We are seeing these businesses do incredibly well. And when we first started fundraising for a fund and we started telling people this about 2.5 years ago, people were doubting it a bit. Climate tech wasn't really a term that was being used widely. And since then, we've had reports from PwC say that climate tech as a VC investment is growing faster than AI ever did. 3 times faster than AI ever did, in fact. And it's been like the fastest growing space that people are investing in. And this includes generalist funds. So it really makes sense from all different points of view. This is what we have to focus on right now. And when everything comes together at the same time, then we should be investing in impact, because that's where the world is moving, and these are the problems that we should be solving with the technologies that we're building.
Brilliant. And just to finalize on the VC side, Allegra, can you talk a little bit about this from the breakthrough side?
Yes, happy to. I think that I'm very much in line with what has been said so far by Thomas and Heidi. So at the end of the day, I think that personally I made the choice to try to contribute to fighting climate change, because at the end of the day, it's the biggest challenge that humanity is facing. And so that challenge renders all others, I would say, completely irrelevant. We first need to address climate change, otherwise we're doomed. So out of necessity, I think that we have to indeed go forward with for impact methodology. And so that's very important, I think, to make the difference between ESG compliant with impact investors and for impact investors, because there's a lot of greenwashing on the market. And I think that all of us here around the table are really abiding to the for impact logic, which means that you basically begin with a problem and understanding its root cause, and from there you basically try to understand which are the most impactful potential solution to addressing that problem. So you seek truly impact maximization. But as Heidi rightly pointed out, it's also the biggest economic opportunity for tomorrow, because I mean, addressing climate change basically means that you have to change everything that we do and we consume and the way we move on a day-to-day basis. So it's in every aspect of our life, what we eat, how we transport that food, the batteries that we're going to put into the bicycle that Tomas was mentioning. Where is the lithium coming from? How is it processed? Is that efficient? Can we recycle it? So in any, I would say, activity that we do on a daily basis, there's a footprint, and therefore there's a climate impact to seek and an economic opportunity.
Kinga, do you mind if I add something super quickly?
Go right ahead.
Yeah, just wanted to comment on a few things, which are great points. So one is Allegro is being very humble. We co-invested with Breakthrough, and the guys are doing a phenomenal job. Obviously, they have fantastic resources, fantastic technical people, and we co-invested in H2 Pro, one of the Israeli's hydrogen companies. It's fantastic to have them on board. It cannot be underestimated what they do and what impact Breakthrough had in general on the whole green thing, on the whole VC thing. They're not only a VC investor, also doing a lot in policy, a lot in technical analysis, has been fantastic. But actually kind of wanted to reflect what Heidi said about LPs. Once they started talking LPs a year and a half ago, and what changed it and how they look at it. For us, is also in the market for the fund too. And when we're speaking to investors 3.5, 4 years ago, you're coming in with the pitch for climate. Jesus, they would look at you like, dude, what are you talking about? Like, what? There's no opportunity. Like, don't you remember what happened? You're too young. You're too young to remember. You don't know anything. And now, luckily, there's so many smart investors who read about this thing, who thought about, who saw it, who saw success stories, who follow the leaders or people they believe that started talking about it, and everything from Larry Fink to Bill Gates to everyone else. And it's so much easier. There's so many people now that want to talk to you proactively, share their knowledge. Some people wouldn't invest in the fund, but like, guys, look, I just want to read. I just want to understand. I'm 55. I'm sort of going to the, going to sold my business. I really want to spend 2 years reading about understanding, because it's something I feel there's something in the air about this industry that I really need to sort of change my mindset. So that's been fantastic. And that shift really started happening over the last 18, 24 months. And it's going rapidly, very, very rapidly. So just quick thoughts.
Absolutely. Thanks, Thomas, for that. Coming back to you, because you are living it. You are living it every day.
Exactly.
Tell us about that story. How did you get into this? Why this?
Yeah.
Why?
So this impact investment, either by startups, companies, and by the venture capitalists, for me, it's a common journey that we have to contribute together. So we'll talk a little bit from point of view of startup companies working on the circular economy for photovoltaic industries. So by education, I'm a physicist. So when I try to be convinced by concept, I split down to very concrete concepts. So for me, impact investment, we have to address 3 aspects. So the first one, ecology, of course, no doubt. Then the social aspects and economy aspects. So for the ecological aspect, this is actually the starting point of our deep tech startup. Today, the solar panels, they arrive at the end of life. There's collection of end-of-life solar modules, but there's no effective recycling. That means the solar modules are collected, the aluminum frame is taken down, the junction box, electronic device behind is recycled, all the rest is principally shredded and landfilled. So Rosi, with our proprietary technologies, innovations, we could demonstrate with the help of EIC fund, so we received a mixed investment, to demonstrate on an industrial scale, industrialization process, that we can take out the highly pure raw materials from end-of-life PV modules and to be reintegrated in different strategic industries, such as the chemical industry, PV, semiconductor, and storage. Now, this is the ecologic aspect that is the starting point for our journey, that we develop technology to tackle that. Then Rosi was founded end of 2017, so we have been existing for 4 years. When I look back, actually the biggest frustration and probably the biggest success, what I see as CEO of Rosi, is the team. Rosi is a French company. The team is composed, actually, the experts all across Europe, from Germany, from France, from Switzerland, with industrial experience. And we also have very young engineers. It's amazing for me to see how they are fascinated by this journey, which might not bring them a very strong, very big economic return very fast. So this gives me a lot of pleasure. I also see, so Rosi team is composed of pretty many female co-workers on all levels. I also see how the half of our population, how we could contribute also to this common journey towards a circular economy. This is something actually I feel very much rewarded on our contribution, actually, to touch a little aspect on the society. Then, of course, the economic aspect. I have to admit, at the very beginning of the development of the technology, that was not the first aspect we considered. We want to really to be sure that technology will work. Then with the exchange with the venture capitalists, with different funding, we were more and more aware of the return on the investment for many, many reasons also. And we start to really take into consideration of the economic aspect. Actually, this input from the investors help us to have a better choice of the process, even technology, to consider the economic aspect, also help us greatly to determine the volume of our first recycling line. So how much the volume we have to invest in order to have a reasonable return investment time. So this, I really regard all this exchange with different partners as very positive, that we mount this business actually together. So today, Rosi, with the help really of partners and our investors, EIC fund, that we are building the world's first photovoltaic module recycling site in the region of Rhône-Alpes in France.
Mm-hmm. Congratulations.
That's my 2 cents.
That's brilliant. So it seems that impact is really picking up speed. It's also picking up higher valuations, which is surely attractive to many investors. That also means that generalist funds want to prove a little bit that they are more into sustainability and impactfulness. How have you observed the market? Is there a lot of greenwashing going on? Or is it more true believers that really do want to move and believe in changing the world for the better? What is your perception in general? Maybe we start with Heidi, since I see you on the screen here.
Sure. So I definitely agree with that. Everyone is moving into the space, and valuations are going up. I do think that a lot of the stuff we see seems really great. I mean, we don't dig into every single case, of course. So I don't feel like there's too much greenwashing in terms of the kind of startup deals that we get pitched. But of course, we have a researcher in house, and there's a lot of determining what actually can work and what can work within the time frame that we have. So we don't kind of have a luxury of being an evergreen fund, for example, or a longer term fund like Breakthrough Energy Ventures. Like we're a 10-year fund, which means we have 8.5 years left to invest. And we need to invest in companies that can accelerate and scale during this time. So we have certain restrictions, and that does mean that we've locked out of some more deep tech or high capex stuff where it requires them to build something that might take 3 to 5 years to build. But so then we don't really go into the cases very much to try to verify whether this is actually real, or whether it can actually work. But when it's easier to see how scalable it is, then we dig in, and generally, it is pretty. I feel like it is pretty genuine what we see, at least. So there's a lot of greenwashing going on in the industry in general, and from investors and from corporates and from others. But I think a lot of the deal flow we get are genuine startups who want to solve a problem and have a really great idea.
How do you see that, Tomas?
Maybe I'm going to comment on the valuation side. It's a hard question, right? You can ask the same thing about the public markets, right? Obviously everything looks expensive to everyone, but people keep investing and putting more money and making it more expensive. But there's another argument that, especially, obviously the whole VC became very, very expensive. All the deals, not even in our space, but in our space as well. But at the same time, maybe given the technological advancement and given the speed that big companies can be created, maybe the opportunity is just large and became very, very large over the last few years. And hence these valuations can be accepted. There are enough people who want to pay up that dollar to get into those deals. I don't really know. I wouldn't be surprised if there was a crash in the public markets over the next 12 months that would impact severely the private market valuation as well. That's kind of what happens with a bit of a lag. We investing in a seed stage, obviously everything became probably doubled in the valuation over the last 12 months. But you see those deals, you see the opportunity, and we still see enough great deals to be on the cap table from our perspective. And there's a lot of money coming in. There's a lot of generalists coming in. I think these are transitory investors that could potentially disappear. The climate space is not the priority. It's more about the riding just a trend. That often could be corporates, maybe generalist funds or private investors. But it's great to see that there's specialized investors like Heidi and Allegro who are going to be there for 10 years plus, at least, if not for 30, 40, 50 years, if all goes well. So my 2 cents, I don't know which direction it's going to go, but everyone says it's very expensive. So when there's no one else who's going to pay that valuation, then it's going to be a problem.
How did you see the progress in that, Allegra?
Actually, a colleague of mine made an interesting remark or a comparison with the internet. And so internet basically started off pretty quickly. Then there was a bubble, it burst, and the market completely, fall apart. And then I would say the second wave of growth started and was fairly resilient and steady for a long while. And it seemed that when it comes to sustainable deep tech, we are hopefully in the same pattern, in the sense that there was a bubble for clean tech a few years ago that also burst. And so that part is behind us. And hopefully we are now on that, I would say, trend to a healthy and resilient kind of growth. And that is now translated in, I would say, the momentum of that market and the reason why we see valuation going up. At the end of the day, whether the fund managers are specialists or generalists, a family office, for impact of fund, with impact fund, an ESG fund, whatever, I think that we're going to need all the resources that we can tap into in order to get there, given the time that we have left. And so I think that the investing community needs really to work hand in hand in order to make it happen. And so we need to, I would say, share what we learned, share where we failed, because it happens, share where we have had a success. And we also have to help, I think, the LPs in better navigating, because there is a little bit of greenwashing. ESG compliant funds are usually just to avoid harm. With impact is seeking financial return first, with a little bit of impact on the side, a little bit like a cherry on the cake. For impact investors are the one that, as I said, are truly seeking to maximize their impact. And so I would really love to see, I would say, most of the capital flow towards for impact investors and fund managers, because these are the ones who are going to lead the charge in making it possible.
And what about you, Yunha? What changes have you seen on the market? Are you seeing the valuations of startups, your colleagues going up? And do you see more interest? And do you also see generalist funds pretending they are very green, or maybe wanting to be greener?
It's a very, very interesting question, actually. When we look at every technological development cycle, there are always leaders and followers. There's nothing wrong to choose to be followers, but as a startup, as a technology company, clearly we have made our decision. We want to be the leader. So for the leaders to go forward, that we're struggling forward today against a lot of crowd, one of the important things is to switch off the noise. For us as a startup, we would like to go forward. We would like to look at the real values, the ethical values, the basic laws of the technology, to assess that with as little noise as possible, to evaluate how we go forward. And we also believe that the more we go forward, the stronger we become, there will be less noise. And actually, we also try to establish a relation with our investors, with our partners, that we share the same value, that we look at the essentials, that the viability of the technology, the real ethical, ecological impact on the environment. We try not to use too many keywords that make us somehow into a little gray zone of going to very much ambiguity on the greenwash. So the evaluation of many startups, I congratulate them when they have a good evaluation, but we really look at the sustainability. As a startup from us, we're not looking for a very fast, short-term, high valorization. We really want to contribute to the sustainability of our environment. So for me, a greenwash goes more in the noise. We try to switch off.
Very good. As you know, the European Green Deal is a very ambitious plan with reductions of emissions by at least 55% by 2030 as compared to 1990 levels, and to achieve climate neutrality by 2050. So the public sector, EIC fund being one of them, is very, very much pushing forward these changes and will surely play one of the major roles in the Green Deal. But it's not possible to do everything without the private sector. And so it's very important to have those large investments coming in from venture capital funds, from corporates, from really everyone out there, to make sure that we can deliver on those targets. What do you think could still happen so that we can mobilize further the investment community and speed up reaching these targets? And maybe I start with Yoon here.
So I talk again from the point of view of startups. To be very, very frank, Rosi is not most successful with private investors up to now. We have some success. So we have a very special project. It's a deep tech project that will tackle a huge market that implies a high capex and a relatively long return investment time compared to many software startups. I'm very grateful, actually, during the exchange with the investors, potential investors, and some of them become pretty good friends, colleagues, with their very sincere feedback on the economic impact, on how to develop further, how to expand further the business. So how we will continue. So for us, we will continue showing our capability of upscaling. That's greatly helped by EIC Fund, actually, that allow us to demonstrate with a very fast pace our industrialization process to the world, actually, where we have pretty good visibility today to be the first line in the world which tackles this high value raw material recycling of end-of-life PV modules. I think from the side of startup, from the point of view that we have more and more opportunity really to show to our partners to get mutual understanding and mutual agreement on what we are really looking to. The sustainability with a good economic return, with a good balance of technology, with good social impact. This is actually what I would like to contribute to this question.
Thank you, Yun. Heidi, you recently raised a fund. You were talking to many angel investors, corporates, institutions, and you are working with them today. You're working with those investors and those institutions and corporates. What do you think could happen that we could mobilize them further to act quicker and potentially even in bigger investment amounts?
Sure. Well, one thing, of course, that I think is going to happen automatically is that when people start seeing more exits and more opportunities in this space, then it will automatically mobilize, especially a lot of investors, to kind of work harder on this. But I really think there's again a few things that kind of come to mind, and one of them is that I think collaboration really is key for us to really be very open about the fact that we need everyone. This is not something that one type of company will solve or one type of investor will solve. And it's very important to kind of see that where you fit into the ecosystem, but also realize we have to work with the others who are not part of that ecosystem. I mean, in terms of, we need to work really closely with universities and make sure that we get research really fast to the hand of investors. But then we have to understand that there's a lot of different type of investors. Like Allegra mentioned as well, that there's, investors, there's family offices, there's angels, there's VCs, there's evergreen funds, there's loads of different grants, there's loads of different structures. And we all need to work together to make sure that we can, in the easiest way, support these entrepreneurs and these people who are actually building solutions. And then the other thing I think that we really do need to push for regulation to happen faster as well. Because I think we don't have the luxury of time to just wait and do things at our own time. We need regulation to kind of come in and say, hey, you're not allowed to do that anymore. And you now have to figure out how to transition within next year or within the next 3 years, because we have a very limited time to solve the climate crisis. It's not enough that we discuss some regulations that might come in 10 years' time. So I think these all things kind of need to come together. And so I think, collaboration and regulations for me are kind of key in getting this done.
Brilliant. Thank you, Heidi. Now I have a question from the audience, actually, and it's one about the accepted industry standards on how to measure impact. So I don't know who would want to take it first. Maybe Allegra with a large fund, an international one backing behind her. How do you do it? How does your impact grid, how does your ESG reporting and measuring work?
If I may just, can I add just something to what Heidi just said and then
yes,
answer
please.
the question?
Please go right ahead.
I think that there are three things that could accelerate, I would say, or allow to tap into the Green Deal and accelerate our collective action to fight climate change. And namely, so one is, I think that it's extremely difficult to navigate the puzzle of a regulatory changes in each country, and then at European level, and then an American level, and so on. But if we want any of those companies to truly have an impact and to truly put a dent into the system, we need those solutions to scale globally very quickly. And so if there's anything that can be done in order to simplify, that would be a game changer. So make the European market more homogeneous from a regulatory perspective, simplify the access to public financing. It remains extremely difficult, I think. So that's one thing, simplification. The second is that those disruptive technologies, as much as they have impact potential, usually when they start, they are more expensive than the fossil-derived counterparts. And so this is what we call the green premium. One way to, I would say, counter that and to fast-track the adoption of those potentially impactful solution is to increase the carbon tax and to apply it on the economy at large. I know it's a bold statement, but the larger is going to be the scope, the higher is going to be the carbon stack and the carbon tax, the easier it's going to be to scale in an economically viable way those solutions. Because if I have, I don't know, a boiler at home, and the cost of I would say fossil-derived electricity goes up, well, obviously I might want to put a heat pump and make sure that my supplier is green electricity related. Anyway, so that's the second point. And I think the third one is that, well, we only finance and help those seeds to emerge. But even though we exist, for instance, for 20 years, we won't allow those companies to thrive to public level. Well, hopefully some of them. But something that is key, again, to enable that market to thrive is to incentivize the corporate incumbent to make early bets and to sign offtake agreements for those new technologies. And so switch to a more efficient process, switch to a sustainable process, and that incentive can take different form, but incentivizing those corporations to make that transition would be a game changer again, because it would allow those companies to generate earlier revenues and therefore attract additional investors to the table. So it's kind of a self-fulfilling loop. Sorry. So that was what I wanted to hide on.
Actually, I think Allegra Jon wants to add something on this.
Oh yeah, that's true. Actually, we're living that. So from the very beginning of the project of our technology development, a second action that we launched immediately was a life cycle analysis, which is actually very, very important for all the companies working technology. We should really be able to follow the life cycle analysis at the same time in parallel with the development of technology. The result of life cycle analysis is even our criteria to make some decisions, which technology we will use. So for every industry, at least for solar, for recycling, electronic, there's actually a list of the criteria you have to look at. Pollution to the water, you should have the standard benchmark, pollution, emission to the air, particles, CO2 footprint, energy. So our industry has done a fantastic job already. So they have all the framework. Now it's up to us to fill in this table with new technologies, with new numbers.
Understood. And coming back to Allegra, because you were just finishing off and starting the new subject.
Yeah, happy to, but I think that Thomas wanted to.
Well, I felt left out.
Okay, I can't see Thomas, so go right ahead, Thomas.
No, I was feeling horrible that I didn't say anything about this, so I'm going to make something up. No, I wanted to react. Some great things being said, very concrete things. What I wanted to say was building communities is quite important as well. And some really cool, concrete examples that I am pretty active in. Simple things, obviously. It's not millions of people, but There's this great newsletter plugged to Sophie called Climate Tech VC, getting a lot of traction, a lot of people, a lot of great discussions, sort of must read for everyone involved in climate tech. Fantastic work. I spoke to her when she was just starting it. It was really cool what she built. Another thing is I'm on this Slack platform called Work on Climate. It's a Slack channel. I don't know, it's like tens of thousands of people with like multiple groups. And you see so many talented engineers, computer scientists that have done great careers from Facebook to Google to IBM to all the massive corps or startups. And they just come in with sort of same sentence. Hey guys, I see there's something cooking. Sort of, I have enough money. I'm in my like 40s. I want to do something in climate. Help me. Help me. Give me materials to read, to get educated about it, and involve me in any projects, sort of NGO, social projects, for-profit projects, and everything else. So this is pretty cool because obviously for the VC you need everything from entrepreneurs to be there, to LPs to invest in VC funds, for this whole cycle to work. So yeah, just a small thing to add. Sorry.
Brilliant. Yeah. Thanks, Thomas. So coming back to the audience question about the generally accepted industry standards to measure impact. Since I don't see all of you at the same time, does one of you want to volunteer an answer?
Happy to start. I guess that there's, a number of different methodologies that are available on the market. I think that at the end of the day, if you're truly a for impact investor, you can create, I would say, a methodology of your own, and using some of the tools that are made available on the market in order to have access to some benchmark. The tool that you mentioned with regard to LCA is extremely important. Unfortunately, all startups can't afford it, or the processes, I would say, too small to be worthwhile conducting a full-fledged LCA, but it's certainly a very important piece of data. In our case, what we do is that we basically, I would say, set up an impact case while we are conducting a due diligence of an investment opportunity. So it's not something that we do monitor and look into after the investment is made. It's actually what drives our investment decision in the first place. So is that technology disruptive enough in order to allow that given process, that given climate-related problem to be mitigated significantly? Because the difference in, energy consumption is such that it's a big enough impact on the one hand, and the market to which you can apply it is big enough in order to get to a point where we can hope to mitigate 1% of our GHG emission by 2050. So we basically build an impact case for each and every investment opportunity that we contemplate. And we only consider looking into the financial, the team, the commercial achievement, et cetera, if we have, I would say, a strong conviction that the impact case is convincing enough.
Brilliant. Heidi, Thomas, do you want to add anything as a final point on this?
Yeah, I can add quickly that we don't have a specific standard, but we work on this very much on a qualitative approach where we look at every company. We have a climate researcher in-house. So first of all, we make sure that there is something core where we see that the core business will have a great impact without it being like a byproduct of what they do. And then we decide, we have a climate pledge that they have to take at the time of investment as well. And then we decide together with the founders on what climate KPIs they will be reporting to us and how they will be measuring their impact based on what is core to them. And for us, it's not always carbon emissions, because we invest in companies that reduce, reverse, but also prepare for a new world. Like there's a lot of companies very wide, and they're so early stage that we feel like just carbon emissions itself is not always the most accurate one at that stage of the development as well. So for us, we really try to figure out what can you report that is core to what you do? How can we measure at this stage? And then we keep revising it after we've invested based on the growth as well. But that's how we do it. So we don't really have another standard that we feel like is good enough for us to use with an early stage startups.
Thomas, any final word on that?
Nothing too more comprehensive than what the folks said. So I'm gonna pass on this one.
Brilliant. I think that we've come to the end of our time this afternoon. Thank you very much. It's been a pleasure hosting you today. Thank you so much, Allegra. Thank you, Heidi. Thank you, Thomas. Sorry you couldn't be here, but hopefully next year. And thank you so much to Yoon with me here in Brussels.